Okay, I think we're going to kick off. Hello, good morning, everyone, and welcome. My name is Karen Sandu. I'm from London & Partners, and I'm delighted to be hosting this Q&A session with two of our valued commercial partners today, Taylor Wessing and Parallel Financials. This is the first in a series of weekly sessions that will be taking place over the next few months. Thank you very much to our panel partners and all of you participants for joining. We hope that your family and friends are all well and safe. And I hope everyone can hear me okay. So just a few housekeeping, okay, I'm getting some nods. Just a few housekeeping items. Just to let you know that we are recording this session. You do have the functionality at the bottom of the screen to ask a question in either Q&A, chat, or raise your hand. We want this to be as interactive as possible, but can I please ask that when you ask a question, you only use the Q&A tab. If you have any technical issues with the session, please also put this in the Q&A tab and my colleague Lisa will be able to help and answer privately. So we'll start with introductions. I lead the team in the financial business services technology space at London Partners, assisting international businesses as they look to set up in London. I'm also joined by my colleague Lisa Stafford. Lisa, would you like to introduce yourself and your role at London Partners?
Hi, my name's Lisa and I'm an inward investment manager and I help new businesses from international markets with the practicalities of setting up in London.
Great, thank you. So London Partners is the trade, investment and promotional agency for London, helping to attract major events, conventions, businesses, visitors and students to London. During these challenging times, we're very much focusing on business resilience, so our clients, stakeholders and partners are aware of the current business environment, opportunities available to them and all the work that is being done by businesses and partners to help each other during this crisis. Our partners are extremely important to us, hence the London & Partners, and their work is fundamental to the assistance that we give clients. So we're really excited to have you guys here today. So Helen, and then you, Larica, if you could please introduce yourself, just give an overview of your role, and also if you could both just give an overview of Taylor Wessing as well.
Hi everyone, I hope you're all well and keeping safe at this difficult time. I'm Helen Farr. I'm a partner in the Intelligence and Mobility team at Taylor Wessing, and it's fantastic to be here with London Partners this morning. My role as an employment partner works closely with the team that we have in Taylor Wessing that manages, supports businesses that are coming to the UK from overseas, and so I do a lot of work helping businesses right from stages, so first employment contracts, handbooks, all the way through to helping them develop. So it's fantastic.
Great, thank you, Helen.
Hi, thank you. Hi everyone, my name is Larica Joubert. I'm a partner in the banking and finance team. And I guess just a few words about Taylor Wessing as a firm. We are a multi-specialist, full-service international law firm with offices across Europe, the United Kingdom, and obviously also a very strong, as you probably know, strong US practice, advising clients in the tech space, life sciences, and technology space. And I have a broad range of clients. I act for corporate borrowers, sponsors, and also act for clients raising debt and also venture debt. Work very closely with my corporate technology partners. And as a firm, as I mentioned, we full range, full service. And obviously today's focus being very much on the government loan schemes. And that is what I will be focusing on.
Great, thank you both of you, Larica and Helen. And finally, Caroline, could you please introduce yourself and give an overview of your role in Parallel Financials?
Yeah, of course. Nice to meet everyone. I've been with Parallel for just over 16 years now, which seems crazy in itself. We work in the employee benefits space. So work predominantly with tech, art, creative, life science companies, from startup right away through to our largest client, which is around 250 people. We assist HR and finance in making sure they're legally compliant with their pension schemes, to working out how they can recruit, motivate and retain their employees. We're a boutique firm. There's only 13 of us in the company. We like to think we partner with our clients and act as an extension to their company, which works really nicely. I know a couple of our clients are on the call, so good to see you guys. But yeah, we'll tell you a little bit more about what we do shortly.
Great, thank you, Caroline, thank you all. So we're going to be breaking this down into two, just to let all of you know. So we're going to be starting with Taylor Wessing. focusing on the government funding schemes and furlough, and then we'll go to Caroline at Parallel Financials, who will be focusing on pensions and wellbeing. Thank you to everyone who has fed in questions prior to this session. I'm going to be asking a number of your questions, but I will leave enough time for further questions should you have them. And Lisa will be monitoring them on the Q&A, so Lisa will be jumping in as and when should questions arise. So Larica, I'll start with you, if that's okay.
Right, of course.
So we all would have heard in the press and seen with the Chancellor press conferences that the government is taking unprecedented steps to enable businesses to access additional liquidity during this crisis. Could you give us a brief overview of the schemes which have been announced so far and a sense of which of these is likely to be most relevant to our audience?
Of course, thank you. So far, the UK government has announced 4 loan schemes. 3 of these schemes are currently operative, and the 4th one was actually announced on Monday, very recently, and that one will be launched in May. All of the schemes are aimed at providing liquidity and loan support to UK businesses affected by the coronavirus pandemic, experiencing lost or deferred revenues and cash flow difficulties. As you can imagine, I can unfortunately not go into the details of all of the schemes because each scheme has a separate set of eligibility criteria, but I think I'll just briefly mention each of the schemes and then also flag the ones which we think will be most relevant to the audience.
Great, thank you.
Kicking off perhaps with the most least likely one for the audience today is the first scheme, which is called the Covert Corporate Financing Facility, and we refer to it in short as the CCFF. And this scheme is designed for large, established UK-based corporates looking to raise significant amounts of short-term liquidity. And how this scheme basically works, it's just an eligible borrower who should be investment grade rated. And if they don't have a rating, then their lender should deem them to be investment grade rating. They will issue bonds which will be subscribed for by the Bank of England. There is obviously various other eligibility criteria, but we think that this one is probably not likely to be relevant for today's audience. Okay. Then moving on to the next one, which again, unfortunately, you know, lawyers do like to shorten things, long name, is the Coronavirus Business Interruption Loan Scheme, which we refer to as CBILS. Now, CBILS is potentially more relevant for today's audience, but it is, of course, important to note the various eligibility criteria. So it will depend, to be honest, on the relevant business, and we'll need to assess on a case-by-case basis. That said, CBILS is designed for UK-based small, medium enterprises, SMEs, with a turnover of no more than £45 million per annum. If I may just pause for a second on the turnover test, because the British Business Bank's website has indicated that turnover test is basically looking back 12 months from the date of application of the loan, and you do look at it on a group basis. So looking back 12 months from the date of applying for the loan, on a group annual turnover basis, you have to have a turnover of no more than £45 million. Okay. Now, how the scheme basically works is the scheme and the loans are provided by accredited lenders, and these lenders are accredited by the British Business Bank, and you will find a list on their website. So you basically apply through an accredited lender, but then the government will basically guarantee up to 80% of the loan amount. So that's obviously an incentive for these lenders to keep the economy moving and to keep injecting liquidity into the market. The CBILS is quite attractive just because the CBILS basically provides that there is no initial fee payable by the borrower, and the government will basically pay the first 12 months of interest. So that's quite an attractive option, as you can imagine. That said, obviously, any further interest payments going forward, and obviously the repayment of the loan at the end of the term will obviously have to be paid by the borrower. I think for us today, it's perhaps just important to focus on one key criteria, which I think the audience today will have to be mindful of. And there is a criteria or a requirement that in order for you to apply under the CBILS, you must not have been in financial difficulty as at 31 December 2019, and you cannot have been loss making. So I think that is obviously quite important to note, that you cannot have been loss making. And we think that that then means that unfortunately the scheme will not necessarily be available for everyone on this call, assuming that obviously some of the audience members are actually currently loss making. So that's one of the important points just to mention. Obviously, as you can imagine, there isn't necessarily lots of guidance as to what it means to not have been in financial difficulty. But some of the key lenders, accredited lenders, have communicated that in their minds, that means that no collective insolvency proceedings and not subject to any collections. So we do need to look at it in a little bit more detail if any of the clients on the call are interested. But in summary, I think that's just the key points of the CBILS scheme. Then just moving on to the CBILS Plus, the larger version of it, which we call the Coronavirus Large Business Interruption Loan Scheme, which we refer to as CBILS Plus. Now, CBILS Plus, as you can imagine, we're looking at bigger companies, and there the requirement is that you must have an annual turnover of more than £45 million. Now, in the CBILS Plus scheme, we did not receive the same guidance as in CBILS with what is meant with that annual turnover, but we think we would apply the same logic that it is on a group basis, group annual turnover. Now, if you have a turnover of between 45 million and 250 million, then you can borrow up to 25 million pounds under the scheme. And if you have a turnover of more than 250 million pounds, then you can borrow up to 50 million pounds under the scheme. And it's very similar to the CBILS in that, again, it's provided by accredited lenders, and the government will guarantee 80% of the loan amount. And there are also other criteria which we can get onto perhaps a little bit later. So we've covered the CCFF, the CBILS, and the CBILS Plus, and perhaps more interestingly for today's audience is the one which was announced on Monday, very recently, which is called the Future Fund.
Yes. So that's if you are not yet profit making, so i.e. a startup company.
Absolutely, pre-profit making and pre-revenue. And that was announced on Monday, and the UK government said that they will make available a further £1.25 billion to basically protect firms that drive innovation and also research and development in the UK. So it is ultimately aimed at high growth companies and also those companies focusing on research and development, and very much looking to protect the innovative businesses in the UK market and acknowledging the role we play in the tech space and in the startup space. Unfortunately, as of today's date, we don't have the full set of criteria. It's only been announced on Monday. So it's very much watch the space. It is due to be launched in May. So what we do know today is that it's basically a £500 million investment fund for high growth companies impacted by the crisis. And it's made up of funding by the government and the private sector. So the government will provide funding which will have to be matched by the private sector by way of investment. And the way that will work in practice is it's basically a convertible loan which will be issued, and then that loan can be converted into equity upon the next fundraising of the relevant business, or it can then also be converted into equity if the loan isn't, for example, repaid at the end of the term. So I think it's very much, it's an interesting and a very welcome move. I think there has been criticism in the market that the CBILS scheme, obviously the clear requirement there not being loss-making, did not cater for pre-revenue and pre-profit making businesses. So I think this is very much the government's attempt to obviously address that concern in the market generally. It is important to note that there is one criteria that we are obviously aware of as things stand today, and that is that the business must have received an equity investment of at least £250,000 in the last 5 years to be eligible. Now, as I mentioned, they do say, if you look on the British Business Bank's website and the government's websites, they have published a term sheet, but you'll see that they do very much say in that term sheet that further eligibility criteria will be published in due course. But that's obviously the one thing that we know as things stand today.
Okay.
And that's in a nutshell. Sorry, very long debrief, but I think it's just good to give the audience a brief overview of all of the schemes, the 4 schemes, and I think the last one, as I mentioned, to be launched in May.
That's brilliant. Thank you. I'm very conscious of time, so I'm just going to ask one final question. If the parent company or stakeholders or shareholders even of a UK business are incorporated in a foreign jurisdiction, which a lot of our clients are, for example, in the US or China, which applies to many of our clients, would that disqualify such UK business from participating in any of the schemes?
No, not in of itself. I think the test is that there is clearly a need for some sort of meaningful business presence in the UK, but the mere fact that the business has an overseas parent company or a foreign investor does not render it automatically ineligible to participate in the schemes. And even the British Business Bank's website, under the frequently asked questions section, they confirm that foreign-owned SMEs are in principle eligible to apply, for example, for CBILS, provided that they are trading in the UK. Now, obviously, I think it's important for us just to pause there, because clearly, I mean, as you say, that does not disqualify you out of the blocks, but we do need to obviously assess what is meant with trading in the UK and having a business activity in the UK. And to be honest, there isn't that much guidance on that front just yet. But what we do know is that you do need to have a meaningful presence in the United Kingdom, and you have to be trading in the UK.
Okay, that's brilliant. Thank you. Really helpful.
You're welcome.
I'm just going to go to Helen to talk about furlough. I mean, this is a new concept introduced by the Coronavirus Job Retention Scheme. Can you explain what this means and what steps does a business need to take to furlough their staff?
Thanks, Karen. Yeah, so furlough, it's really interesting. It's a completely new concept that the government's introduced literally just over a month ago to avoid either making mass redundancies or putting people onto what's called layoff, which is basically when a business doesn't have work, there is a provision that allows under English law previously and still at the moment that you can put someone on layoff, which means that you send them home because there's no work for them to do, and in essence they're not paid their full salary, but they can claim a very small grant, which is very restricted amounts for sort of 8 days work. So to avoid that, obviously because of the current crisis, the government designed this concept whereby employees in essence not expected to work, but their salary costs will be can be reclaimed by their employers up to this cap of £2,500 a month, or 80% of what they're actually earning if that's lower than that amount. And the way it works, which we've had lots of questions about, is originally the original guidance simply said that you just needed to put someone onto furlough, give them sort of written information to that effect. But I think if you are reducing salary, you do need to get employees' agreement to that, just under normal contractual principles to avoid a potential claim. And actually the government has very recently, just last week, and as part of a Treasury guidance, suggested that they would expect there to be an agreement between individual employee and the employer about the fact that they've gone on to furlough. The key point, Karen, is that employees and employers have to keep that paperwork for 5 years, because we know that the revenue will be auditing payments that have been made, and they'll be looking to see the paperwork and you've got evidence in that agreement.
Oh wow, okay, I didn't realise that. Thank you. So what wage costs can be reclaimed as part of the new scheme?
Well, the maximum that you can claim of wage costs is this £2,500 figure.
Yeah.
And on top of that, you can claim the employer NIC contribution, and you can also claim the basic employer contribution into an auto-enrolment pension. So that's clear, but then there's obviously lots of questions about, well, what's wage costs? Because obviously some people, if you say, take for example, estate agents, most of their salary is actually built up with commission. A lot of lower paid workers actually, again, their earnings are paid dominantly, they're sort of increased with overtime. So what the government said here is that if you've got a contractual to a time, or you can show that there's a contractual adjustment to commission, and you can show that you should be paid that commission based on work that you've done prior to being put onto furlough, then the employer can use that figure as the baseline to sort of set this wage cost figures. The other point is that holiday accrues during the period when you're on as well.
Oh really? Okay. Fascinating. Thank you. So can directors be furloughed?
Well, this is really interesting because most directors are employees, and as such, yes, of course, you can furlough an employee. That's what the guidance says. But the issue is obviously directors, they have additional duties over and above normal employees. They have what's called directors' duties. And what the government has said is that, yes, you can furlough a director. But you can, but obviously that you have to allow them to continue to fulfil their director's duties. This is where there's a bit of an ambiguity. I know that the IOD, for example, has raised questions of the HMRC about this and BIS, because the issue is, well, how far should you be expected as a director? You know, obviously what the guidance says is you shouldn't be doing commercial activities. So, for example, it's clear that you shouldn't obviously carry out the day job, but part of the director's duties is that you should promote the success of the company. So, how far are you entitled as a director? What steps can you take to meet that duty? So, it's not completely clear how far as a director, what steps you can take to meet those duties.
Okay,
that's interesting.
Yeah, that's interesting. Thank you, Helen. I believe we have a question from Lisa from the audience.
Yeah, we've got a question that's just came in. So it's from Louise. I've heard that if you are furloughed, you can't work for your employer, but you can work for someone else or volunteer. Is that correct? That's aimed at you, Helen?
Yes, the position is that if you're furloughed, obviously you can't work for your employer. That's absolutely right. You are entitled to furlough. To volunteer. If you, it's interesting because if you, most employment contracts are drafted on the basis that you can only work for your main employer. And we've interestingly had a number of individuals coming forward and saying, I'd like to, perhaps do work that's paid work, but that's actually helping the current crisis. And so it is possible to agree a contractual variation with allow them to work, albeit on a paid basis, for someone else during the period of furlough. The government has allowed that. And I think at first that seemed quite surprising. I was quite surprised about it because it seems odd that you would basically be getting reimbursement for someone's wages and yet they can be working for someone else. But I think it's because the government's quite keen to allow people to play their part and to take steps to help, so maybe fruit picking or whatever it might be,
right,
just to help the national at the time.
Okay, thank you. A question that came in is, a lot of people are saying that their work levels have obviously been reduced. Can they still use furlough? Do they have any other options to manage their employment costs but keep staff?
Well, interestingly, one way around it is because the furlough scheme allows you to furlough staff for a minimum period of 21 days. What some of our clients and businesses are doing is they are sharing the work between teams. So they're almost putting half, so for example, they're putting half the team on furlough for 3 weeks and then allowing the other half to be working and then swapping them over. So that's one way around it. The other obvious way is obviously if that doesn't work for your business would be to look to agree a salary reduction based on a reduced hours.
Oh, they can do that. Oh, okay.
Yeah, but you can't claim under the furlough scheme if you're doing that.
If you're doing that, okay.
No.
Oh, okay, fascinating. I had one final question.
Yeah.
And it came through. I've heard that furloughed staff cannot take holiday. Is that right?
Well, that's another interesting point because when the scheme was first introduced, ACAS put out some guidance, and as part of that, they did actually say that when you're furloughed, you can't take holiday. They've since moved away from that position, and the recent guidance does say that employees can take holiday during furlough. But the issue, the big bear trap that employers need to be aware of is that if you do allow someone to take holiday during furlough, I think under normal legal principles, you'd have to pay them their full salary for those days of holiday rather than 50% or the reduced amount. So it would work much in the same way as if someone's on long-term sick leave and asked to take holiday. currently, even though they may be either on nil pay or reduced pay as part of that sick leave, any days that they take holiday should be paid under at full salary rate. So it's interesting. Yes,
that is interesting.
Point to sort of be aware of.
Well, thank you both. Thank you. That's my last question from for you and Larica. I really appreciate it. Very fascinating stuff. And I'm sure if we have any more questions, Lisa can come in too. So I'm just now going to go to Caroline at Parallel Financials. First, we're going to focus on pensions. I know that there have been some questions on this, so I'm just going to plow ahead. So it's a difficult time, financial time for some businesses. Do employers have to pay into pensions for their employees?
In short, they do. The pensions regulators issued guidance recently to say that there's going to be no option to suspend the pension contributions at this time.
Okay.
Very blunt.
I mean, yeah, straightforward. If employees no longer wish to pay into their pensions, as they have had a change in their financial situation, which obviously applies for many people, can they stop?
Yeah, of course. So under the workplace pension guidance, they can cease contributions at any time. Anything they've paid into their pension remains in their pension. Their pension scheme remains open, just no further contributions go in. The contributions from the employer would also stop at the time that the employee stops contributing. The important thing to note on this is that there's some really tight guidelines on what an employer can do in terms of inducement to their employees. So they really must be sure that they're not saying to their employees, oh, you need to opt out of your pension scheme, because they can't be seen to induce employees to do that.
Right. Yeah, I mean, that would be pretty outrageous, wouldn't it? Okay. Thank you. Elisa, do you have any questions through at all? Or if not, I'll just move on. No? Okay. So Caroline, if an employer is operating a pension scheme which is more generous than the government's minimum contributions, which applies for a lot of businesses, does this have to continue?
Pensions are often a contractual obligation. So a number of companies look at their pension scheme not just a legal requirement, but as an employee benefit. So it may be that they're doing what they legally have to, but they're going over and above that. Now, it is possible in the current situation to reduce what employers are paying in terms of their contribution. As Helen mentioned, you can reclaim your 3% of qualifying band earnings from the furlough scheme for furloughed employees. I think there's a couple of very clear actions to make. Pensions are contractual, so if you are changing the basis of your pension contributions, make sure you tell your employees, get their agreement, make sure it's documented. And secondly, make sure that your pension provider is happy for you to do this as well. Most pension providers are being very flexible at the moment, but it's important that you just get authorization, so there's no expectation, there's no reporting to the pensions regulator or anything like that. Just make sure that they're aware of what you're doing as well. Okay, great, thank you. Is there any government support to help employers pay pension contributions? Well, as Helen mentioned, it is covered by the furlough scheme. The important thing on that is that contributions will be reclaimed based on that 3% qualifying band earnings. Now that's total earnings between £6,240 and £50,000 for this tax year. So you receive 3%, it's around about £189 a month as a maximum. The other thing to be mindful of, especially in terms of the furloughed amount, you pay contributions via a salary exchange or salary sacrifice scheme. This reduces employees' gross earnings. The amount that they can reclaim through the furlough scheme is therefore 80% of the post-sacrifice earnings. So it's after the pension contributions have been taken. Okay, thank you. And then one final question on pensions. We have only just established our company in the UK and haven't fully completed our workplace pension project. Do we still need to do this? You do, yes. There is guidance when you first set up your pension scheme. You've got a postponement period that of up to 3 months, but you will still need to make sure that your declaration of compliance is completed with the pensions regulator within time. It's generally 5 months after the date that you take on your first employee. So it's really important that you make sure that you do that. The pensions regulator have not let up on fines. So we're still seeing people being hit by these unexpectedly.
Okay, great. Thank you, Caroline. There's a slight technical, sometimes the volume goes out just slightly. I don't know if anyone else is experiencing it, but I'm just getting a slight glitch. Just thought I'd let you know. I'm not sure what speaker, but
okay.
Yes. So we're going to go on to the physical, financial health and well-being of employees. It's a primary concern for many businesses. A very recent study actually from the Office of National Statistics says that over 4 in 5 adults in Great Britain, that's over 84%, said they were very worried or somewhat worried about the effect that the COVID-19 is having on their life right now. And just over half of adults, about 53%, said it was affecting their well-being. So this topic's really relevant to everyone. And we've had questions through on it. So if an employer offers a benefits program to their employees, can this be stopped at this time to save money?
Under the terms of furlough, you do need to maintain benefits while employees are furloughed. Certain providers will allow you to suspend them in certain situations, but you need to be really careful when you make any judgment calls like that. Things like insurance, stopping them and restarting can have a big impact on people's underwriting, what conditions are covered, what exclusions they might have. So you may think of it temporarily as a cost-saving measure, but actually it can have a big impact on your employees going forward.
Right, okay, thank you. So there seems to be a huge amount of information and support out there, probably quite a lot. If you just Googled it, a lot comes up. So if an employer is concerned about an employee's well-being at this time, what support is available that you would recommend?
Well, it's a really good question. Like you said, there is so much information out there. We were saying the other day, what would happen if we'd gone into lockdown 20 years ago, before the internet was up and running, before social media? It would be a completely different situation.
Wouldn't it just?
I don't know if people caught the tail end of our conversation in the green room earlier. We were saying a lot of media, YouTube stars are offering free workouts for the physical side of well-being. And I think that the well-being side can fall into 3 components. You've got your physical, your mental well-being, and your financial well-being. The physical side is probably the easiest thing to deal with at the moment. It's a bit.
Did you say the physical side? Sorry.
The physical side. Yeah, it's the bit that we see day in, day out. People are being encouraged to get out and do their hours exercise. People like Joe Wicks are making people do PE at 9 o'clock in the morning.
I know, loving Joe Wicks at the moment.
There's a real encouragement between that. Medical insurers are also really pushing the physical things at a time where health treatment is restricted. Non-essential cover, elective treatment is paused. Insurers really need to push themselves, show some value. So a lot of companies offer private medical insurance for their employees. There's different companies that are offering different benefits. So Vitality are giving all their members free access to Peloton.
Sorry, did you say
workouts.
Vitality?
Yeah, Vitality Health. A large part of what they do is to do with their rewards program, their gym, their half-price gym membership, and running shoes and things. So all of a sudden, gyms are closed, Starbucks is closed. What can they offer to their employees? So companies are really looking outside the box for these sort of things.
Okay. Oh, great. Thank you. How can employees access assistance with physical well-being? I mean, well, you mentioned it briefly, but
yeah, I mean, the internet's probably the answer 9 times out of 10. Gym chains are doing free classes. There's also access to free things like Joe Wick. So
sorry, Karen, I didn't catch it. Can you just repeat it?
Yeah, of course. It's 9 times out of 10 is based. So gym chains are doing free classes, training, that sort of thing.
Yeah.
And then just getting out and about. Look at your local vicinity, get out and have a walk and investigate the area.
Yeah, I mean, you could use you could do that in your daily exercise routine, right? That you're allowed out once a day. Yeah. And how can employees access assistance with mental well-being? Because this is, I mean, as I said, it's over 50% of the population at the moment.
And this is the hardest part. This is the bit that you don't see, you can't tell. Everyone's going to have days where they're finding this difficult. Things like employee assistance programs is where they come into their own in times like this. It gives employees telephone counselling, mental health well-being apps, mindfulness apps. It gives them access to just speak to someone outside of their home, outside of their work, someone that they can just talk to confidentially.
Right.
A lot of benefits actually include employee assistance programs that you might not even know. So often payroll software might include it, medical insurance might include it, income replacements. There's lots of ways that you may actually have possibly not even realised, but you might have access to an employee assistance program. Again, mindfulness apps, things like Calm or Headspace are really, really good ways to start, and maybe just encourage your employees to take 10 minutes out of their day and just log off, take 10 minutes, breathe, and just take some time for themselves.
Okay,
I think
it's really helpful.
The difficult thing, especially working from home, what we're tending to find is that people are logging on at different times. They're logging on earlier, they're working later, which obviously from a presenteeism side of things is really good, but actually it's not great for them in the long run.
Yeah, I mean, it really does depend on the company. I mean, our company, for example, has so many different initiatives to help you with your mental well-being as well. So it is very dependent on company as well, isn't it, and what you're offering?
It really is, yeah.
Okay. One of the biggest things is obviously people are worried about furlough. Just generally, there's a concern about financial issues. So is there any assistance available to employees who may be experiencing financial problems at the moment?
Yeah, again, through employee assistance programs, it gives really good advice, financial advice, and the Citizens Advice Bureau, again, is giving some really good advice. People like Martin Lewis, again, some of the things you can access online is very good. We're actually running our first financial webinar next week for employees, to kind of get an idea about the behaviour behind their spending, especially in the current situation. Online shopping still seems to be quite prevalent.
It's a dangerous thing, that, to be honest with you.
It really is. So it's a great time to look at your finances and look at your behaviour behind your spending, so that when we come out of lockdown and we come out of social distancing and hopefully resumes as normality would, taking on certain things that you do now for the future.
Yeah. When is your webinar next week?
So that is being run next Wednesday, and we can share with you on that.
Okay, brilliant. Really appreciate it. Thank you. So Lisa, I'm not sure if any other questions have come through or not.
One of the questions that came through was on Eventbrite. It was submitted, and I know that it hasn't been answered, is for at an employer point of view. A lot of employers have contracts with perks, companies that give their employees perks. So what would you say to employers who are thinking about ending those contracts with employee perk companies?
Things like the perks side of things, where they are offering sort of discounted shopping vouchers and cinema tickets and things, obviously are less relevant at the moment, and it has less of an impact than sort of stopping death in service life insurances or medical insurance. So it is an option. What I would say is that's probably a very low cost benefit that can actually help your employees at the moment. Getting sort of 8% off their Sainsbury's shopping and things like that can have a very big meaningful difference at the moment. I would think maybe, I know that it's at the moment it's easy to look at what you can save in terms of benefit spend, but you also need to look at the long run impact of that for employees.
Thank you.
Great. Thank you. Is that all, Lisa, on the questions?
That's everything.
Great. Well, thank you all. So if we don't cover all the topics today, we will have future sessions over the coming weeks and months. So we will let you know about those sessions. So before we wrap up, Lisa, do you want to just quickly go through the Zoom poll?
So hi everyone, I've put together a very quick live poll that you can answer in 30 seconds. So I'm just going to launch the poll now, and you have about 30 seconds to answer the poll question. So the first question is, how helpful did you find this session today? So it'll indicate whether we should hold more sessions like this. Second question is, how likely are you to recommend London Partners Q&A sessions with our business partners to another business? And the third question is, how engaging and interactive did you find the format of this session? So this is very valuable feedback for us, given in mind that this is our first session and we seek to improve them or make changes for future sessions. So I'm going to end that in 5 seconds. Okay, thank you.
Great, loving the technology. Brilliant, thank you. So I'd like to thank everyone, all of our partners for attending today. Helen, Caroline, Lerica, thank you so much for your time, your expert advice. I'd like to thank all of our participants. So just a few final points. So our next session will be held next Wednesday at 4 p.m. British Standard Time. That's to help accommodate a lot of our clients in North America and that side of the world. We will be sending a follow-up email to you all, and that email will include details of the event coming up. What we're also hoping to do is we will be having further events as they come along over the next few months. So we're looking to have everything in one place, so you can all access that quite easily. So we have a WhatsApp group. It's a good news room, if you like to call it that. But essentially, all you need to do, the numbers come up, is add this to your contacts, sending your name, job title, and your company name. And we'll send you good news. So previous to obviously the coronavirus, it was good news stories, any kind of good news stories, whether it's funding, anything to do with London, that's great news for us as a city. What you'll find now is that we'll be sending you stories and good news items of businesses helping other businesses, partners, initiatives, offers, and obviously the government schemes as and when they get announced will also come through this. It'd be great if you can amplify that with your network and share that with your friends and colleagues. And then now here are all of our email addresses, because I appreciate that we might not have covered everything that you need. You might have questions. So please feel free to reach out to everyone directly. Happy to help and answer any questions that you may have. And I think that's it, maybe 2 minutes early, Lisa. But,
very good time.
Yeah, really appreciate it. Thank you, everyone. Look after yourselves, stay safe, and hopefully see you next week.
Thank you.
Thank you. Bye.